Welcome back to this Moneycontrol live stream. You're watching Closing Bell, with me, Nandita Khemka. Well, it's been a good day of trade, given the fact that we had the RBI policy as well that was largely in line with estimates. And in fact, even the, RBI governor maintaining his stance as well, and the inflation as well as GDP forecast both for the current fiscal were maintained. So upside surprise was, of course, given the, was given by the fact that the inflation forecast for FY24 was held steady, and there were expectations that he will revise it upwards to 5.5 or 5.6%, but that hasn't happened. But even though the governor has clearly stated that 4% is the kind of target that the central bank is looking at, and not 2 to 6% band, that they were doing at one point in time. But aside of that, if you look at the market action, of course, triple-digit move coming in on the Nifty today. So we've ended above that 19,650 mark. Sensex also just about shy of that 66,000 mark, but we did clear it in intraday trade. And the good part is that mid and small cap indices have also participated in today's up move. All of the almost all of the sectors were in the green. The Nifty Bank, in fact, gained somewhere around 0.3%, but it's a Nifty IT, Pharma, and Realty pack. That that index was up somewhere around 3.5% or thereabouts. Among the individual movers, of course, you had Bajaj twins, Bajaj Finance and Bajaj Finserv, on the back of the board nod for the capital raise of somewhere around 10,000 crore rupees. Those two stocks were up anywhere between 3 to 5% apiece. You have other movers as well in the form of Titan, IndusInd Bank. You have Tata Consumer, ITC, JSW Steel were some of the gainers. On the losing end, the losers were few in trade today. So you had the likes of HUL, Coal India, ONGC, Asian Paints, Bharti Airtel, HDFC Bank. These are some of the losers. But let me bring on board our guest for today. Joining me is Hemen Kapadia of Choksey Securities. Good afternoon, Hemen. Thanks a lot for taking our time and joining in. We are ending the week on a positive note, and of course, we have India's first match in the World Cup tournament on Sunday. So this only adds to the sentiment. Given the fact that we have cleared the 19,650 mark, would you say the setup for next week looks a little positive as we step into the earnings season?
Very good afternoon to you, Nandita. Thank you for having me on the show. Yes, I totally agree with you. I think this does make the sentiment better at the beginning of the week. A couple of other things also which have happened, Nandita. If you look at the dollar index, that's come off just a bit. I think that is a sense of relief. I believe the US 10-year yield should also come up a bit. Crude has come off. US VIX has also off from the high. And our VIX has also come to sub 10.5 from almost 13. So frankly speaking, it's been really fall down. Now this had to translate somewhere into positive price action, which has happened. And like you said, it's a good stepping stone. I think next week, at least opening wise, seems better. And two stocks which frankly speaking have been lagging and pulled the market down are now stabilizing. Reliance Industries, sentiment-wise, weighted-wise, HDFC Bank, sentiment-wise, weighted-wise. Very important stocks, bluest of blue chips, have now taken support at important levels and are showing technical signs of a revival. So if Reliance and HDFC Bank have exhausted their corrections, I'm more confident about Reliance and HDFC Bank at the moment. But if both of them or even one of them has done that, I think a new low becomes a slightly of a less of a possibility. So fingers crossed, things are looking better, and if Reliance and HDFC Bank do well, I think we are out of the woods. Nandita.
Right, Hemen, you track the commodity markets also pretty closely, right? Crude, of course, we have seen wild swings in the sense that we've come off nearly $13 from where we were last week. But do you think this is a temporary reprieve, or do you think we'll once again make a dash at that $90 mark on the crude, or do you think we will stick around these levels of $84 to $85 now?
Frankly speaking, a bounce, Nandita, is possible. If I look at the Brent charts, we've closed below the 55-day exponential moving average. All the mechanical indicators on the daily chart are in sell mode. Yes, closer to 82, there is support, and even more stronger weekly support on the 80 levels. But yes, a bounce not withstanding. Going back to 90 plus and 96 now seems a tall order, at least for the next fortnight or so, Nandita. So I don't think That seems to be a worry currently. A recovery, yes. A rally, no.
All right, that's the view. A recovery, yes. A rally, no on crude prices. But let's talk about specific stocks. Before I talk about the realty index, I want to talk about the Nifty gainers. Two of the top Nifty gainers today: the Bajaj twins, Bajaj Finance, and Bajaj Finserv. If you look at Bajaj Finance, I mean, we have positive views on the street about this stock. One of the strongest NBFCs, and some brokerages have given targets in excess of 10,000 rupees on the stock, and stock has gained somewhere around 11% or thereabouts in the last 1 month, and it is decisively above that 8,100 mark. What are the kind of next resistance levels that you'll be watching out for on Bajaj Finance particularly?
Bajaj Finance is in a very typical situation, Nandita. I'll just take 30 seconds more of your time. We spent almost 22 to 23 months in a range between 5,200 on the downside, Nandita, and 8,045 on the upside. So 22 months over here, and now Bajaj Finance is breaking out from here. I believe that this is a monthly level. We're at the beginning of the month, so it's a bit premature to take that call. But even on the weekly level, this is history being made. We've not only posted a fresh all-time high, we've closed at a fresh all-time high. 1, 2, 3, 4, 5. There have been 5 attempts over the last 22 months, Nandita, for Bajaj Finance to take out 8,000. Now we finally have. So frankly speaking, small cool off, little bit of adjustment, profit taking, fine, but looks good. And like you mentioned, some of the brokerage is talking about 10,000. I think that seems like a distinct possibility.
All right, that's the view then. On that, but what about the realty pack? I mean, this index was up somewhere around 3%. Any stocks that you're liking from this space, the likes of Sobha or even Prestige Estates for that matter? Anything that you fancy?
Frankly speaking, it's a rounding bottom, and this rounding bottom has taken, I believe, 12 or 13 years. So at the risk of sounding overly optimistic, Nandita, I think realty stocks should do well for the next 3 years, if not 5. So if the index takes 13 years to make a rounding bottom, consolidate in a bullish pattern, and then now is sort of straining at the leash to break free, I think the next few years are going to be very exciting for realty stocks. Frankly speaking, the safest one would be DLF because that's the big daddy of realty stocks. But I think the stocks that you mentioned, Nandita, total agreement with you. Even the Prestige that you mentioned looks good. We remain, and in fact, it's an outperformer, Nandita. And even the Sobha that you talked about, I think that looks a contra buy simply because let's look at this. Prestige all-time high, going nowhere in the sense clear blue sky, so going anywhere. No resistance levels. If you look at Sobha, high was 1040, we're at 713. So frankly speaking, lot to catch up. Looks good. Sobha is interesting.
Right, I cannot not talk about the IT stocks rather, given the fact that we have some IT heavyweights reporting earnings next week, the likes of TCS, Infosys, HCL Tech, the big three, so to say. Of course, the sentiment, if you look at fundamentals, it could be a little gloomy given the fact that the second quarter is expected to stay, gloomy for the IT pack as a whole, even the third quarter for that matter. But do you think most of all this gloom is already in the price? Because we have seen quite a good recovery kick in after the, downbeat first quarter earnings that we saw from some of these names.
You hit the nail on the head, Nandita. It's somewhere already into the price because the IT index hasn't performed and we're significant off its highs. We spent almost 1.5 years of a correction. If you look at the BSE IT index, Nandita, it came up from 39,000 to sub 26,800. Now we're at 32,000. And obviously the Nifty IT is also doing the same. And from a sell signal in January 22, it's just now that we are seeing buy signals on the IT index on the longer term chart. So notwithstanding what's going to happen as far as the results, not double guessing, but like you said, I think people are anticipating, expecting, and like you mentioned, in the price. So if there is a knee-jerk reaction, I'd say things are looking quite sanguine. So I would be apathetic and I would be more positive than negative. And just one more point to add, sentiment-wise or whatever, Nasdaq does weigh down heavily on IT index and IT stocks. So Nasdaq seems to be positively placed. 13,000 is support. We've been correcting for almost 11 weeks as far as the Nasdaq is concerned, Nandita. Downside appears limited. I think a reversal during the month. We still have 3 weeks, so I'm playing it safe. During the month is on the annual, so that also seems to augur good times for IT stocks. I wouldn't say very exciting, but good.
All right, good times ahead for IT stocks. Expectations are low when it comes to the second quarter earnings, and as you mentioned already in the price. But let's talk about an MCX now, Hemen. The stock had run up quite a bit in anticipation of the shift to the new tech platform. But then, of course, SEBI asked MCX to put it on hold for the current juncture. But sources to CNBC TV18 have indicated that the SEBI panel may have, in fact, given the green signal now to shift to the new tech platform. The stock today was up somewhere around 3% or thereabouts, if I'm not mistaken. Now, once that overhang of the, a shift, or rather, once that shift happens, do you think that stock has the potential to retest its 52-week highs going forward?
Yes, I think so. We've run up from 1280 to 2140, Nandita. That's the all-time high, and incidentally, the earlier all-time high was 2135 in December 21. So we've tested that high, we've cooled off a bit, and now we've consolidating. And like I was saying, if the news comes through, overhang is gone. That means we are going to take a serious crack at 2135, 2140 all-time highs. If we take that out, which is a possibility, the setup is positive, Nandita. High volume. If I look at the monthly volume, we are in October. If I look at the September volume of MCX, highest in the last 4 years. So I believe smart money is bought. Once we take out 2135, I think we see at least 8-10% upside. Setup is good, but we will need this formality of closing above this level. If not on the monthly, at least on the weekly.
All right, that's the view on MCX. But let's talk about some of these jewelry stocks now. Titan was among the top Nifty gainers today. Kalyan Jewellers was sparkling on the back of of a very strong second quarter update. India operations clocking in revenues of somewhere around 30% or thereabouts on a YY basis, and it was reflecting in the stock price as well. And of course, we are heading into the festive season as well. Of course, stocks are likely to sparkle even more going forward. So in that sense, do you think one should be looking at some of these stocks?
We're sitting on top of a very nice rise, but like you said, we are going into a festive season. A little bit of a caveat, because Kalyan Jewellers is a relatively new listing, relative in the sense is listed in 21. So that's probably not enough for me. But whatever data we have, we are absolutely in an established uptrend on all time frames. So looks good. So I feel that Kalyan Jewellers can be considered not a bad idea. But if you were to play it, I would say you can sort of stagger your purchases, because if we walk into the recent high, it would be just some amount of profit booking. So if one can stagger the purchases, but the setup is convincing enough to sort of take a positive view on a slightly medium term point of view.
All right, some of these FMCG names like Dabur and Marico, they have come out with their second quarter updates. Yesterday it was Marico and today it's Dabur. Rural recovery seems to be, a pain point for these FMCG firms, and the recovery is being rather gradual. In fact, Dabur says that it sees its consolidated revenue to grow somewhere around mid to high single digit growth, and even the food and beverage business is likely to remain slightly below last year's revenue. So in that sense, would you say that it would be prudent to wait it out when it comes to some of these FMCG names who are awaiting some bit of rural recovery, because once again festive season boost could play out for some of these names. So would you say that it's it's time to perhaps buy into these also in a staggered manner and wait for some bit of recovery at least in the wake of the festive season?
I think so, Nandita. Like you said, buy it in a staggered manner. Wait just a bit. If you look at Dabur, it's okay. FMCG is basically a defensive sector more often than not. Markets have been volatile, but they have been good over the last few years. So FMCG, especially Dabur, hasn't done much. 660 is the higher side, and 480 is the lower side. The range I was talking about, Nandita. This is approximately 31 months. Now that is a long time. So you are nowhere. Currently there isn't any directional bias. There is a mild negative bias, but that's on a shorter term point of view. So yes, I think one, don't go the whole hog. Spread your purchases, like you said, stagger it. Makes sense because if I take a slightly longer term point of view, Nandita, Dabur, from whatever data I have, is in some insane 24-year uptrend or something. And even if you look at Lever and all of the stocks, I mean, like 30 years and counting. So the long term picture is very clearly positive. It's just that we've seen a few years of consolidation or whatever. So staggered purchase it is.
All right, staggered purchases when it comes to the likes of Dabur. But let's talk about a Nykaa. Of course, just a couple of years since it, listed, so not much data to go by. But, the company has come out with its second quarter update as well. Strong quarter it has witnessed across all verticals. BPC, the beauty and personal care segment, is the one that, drives the earnings for this company. But, fashion segment, that was a pain point. But apparently that has also witnessed strong momentum in the quarter gone by. The trends have been improving in the industry, industry wide as well, given the fact that, of course, the festive season is around the corner once again. And Nykaa Fashion net sales value is also expected to grow in early 30s on a YY basis, which is quite a strong number. So going by that, would you say that, and Nykaa stock has done fairly okay over the last 1 month? I think it has gained somewhere around 3.5% or 4%. But do you think the worst is over when you look at the charts of Nykaa, and could it retest levels of 200 sometime soon?
Yes, Nandita. I totally agree with what you're saying. Limited data, yes, but whatever data we have, Nykaa since listing seems to be technically in the best position since listing. We spent 9 months consolidating between 115 on the downside and probably a 155, 157 on the upside, Nandita. But the setup is looking good. There's a hint of a rounding bottom. Oscillators are turning. Are giving crossover buys, and there are at least 2 rounds of positive divergence. Without getting too technical, looks good. The breakout comes in about 160, 150, but I totally agree with you. 130 can be a stop loss, which I believe should hold, won't need to break. If it breaks, there's something wrong. Doesn't look like. 200, I think, is on the horizon. Looks good, but we need a closing about 160, 150. But yes, the setup is clearly improving, Nandita. Looks promising.
Right. What about PB FinTech? When you look at the new age tech space, over the last 1 month, the up move that it may have seen earlier has fizzled out. And of course, today there was a block deal in the counter, and there are reports suggesting that SoftBank may have sold somewhere around 2.5% stake. So on the charts now, where is it headed?
It looks a bit unclear at this point in time. I would say wait just a bit. There isn't that much of technical clarity, frankly speaking, at the moment. So I would just prefer to wait for some more price action, frankly speaking, Nandita.
All right. So those were some of the stocks, and we took Hemen's views on them. But Hemen, before I let you go, any stocks that are looking particularly attractive on the charts for the next couple of weeks?
I'd say I'd go with my favorite, Reliance Industries. Like it, have been tracking it, have been investing in it for the last 34 years or more. Looks good. I would say that 2293, 2295 was the level posted couple of trading sessions back. Deeply oversold. Reliance has been down for multiple months now. This is the 4th month. It's due for a recovery. So first would be a buy on Reliance at around 2315. I would keep a stop loss of 2290. A target of 2380. It's a very conservative target. I believe that should get overshot. Looks pretty comfortable. The second stock is more of a trading buy, Nandita, for maybe 5 to 10 trading sessions sort of a view. Apollo Tyres has given a breakout above a falling trend line. Volume spike. Volume is higher in the last 9 trading sessions. MACD, RSI, stochastics, all crossover buy on the daily chart. Looks good. One can buy it at 380, stop loss of 368, target of 404, small stop loss, small target, risk reward ratio 1:2, time frame 10 trading session.
All right, Reliance Industries and Apollo Tyres, two stocks that Hemen likes. But Hemen, any particular stock to ride the World Cup wave? The likes of Indian Hotels or Zomato or aviation for that matter. Anything from those spaces on your list?
Zomato does look good, Nandita. Thing is, we moved up a bit, but it's been a very structured move. So with a stop loss at 97, I think Zomato can give you a 10% upside from here. And the other stock which looks a bit promising, Nandita, is already moved a bit, Indigo. So I'd say a small cool off, then it would make sense because it's moved from 2340 to 2570 in a matter of 5 trading sessions. So on a decline, Indigo can be considered, Nandita.
All right, that's the view on some of those stocks that are, in fact, riding the World Cup wave. With that, Hemen, thanks a lot, as always, for joining in and sharing your thoughts with us. Always a pleasure chatting with you, and wish you a very happy weekend.
Same to you, Nandita.
Thank you. Well, on that note, we are ending the week on a happy note, given the fact that the Nifty has reclaimed that 19,650 mark, and the Sensex also, just about a shade shy of that crucial 66,000 mark. Of course, we'll come back and track the markets with you on Monday morning. But from me and the entire team, thanks a lot for tuning in, and have a great weekend and come back refreshed after the India-Australia match on Sunday. See you on Monday. Thanks a lot for tuning in. Goodbye, and stay tuned to Money Control for all your other news and updates.